Hey guys, back with another daily video. It's actually early Wednesday morning. It's 8:30 a.m. so the market is not open yet. So as you can see, as I talked about in my last video, the market kind of dipped in the last hour and actually closed a little bit in the red. Here's that chart that I usually show you with the different sectors of the market and whether they ended up green or red for the day. If you're not familiar with this website, this is Finviz.com. It's Finviz.com, and it's completely free. It's a very good summary website. There's a lot of information on this website, so I always just take a peek at it. I don't use all of the information here just because it's overwhelming and I don't really need that, nor do I have time to look at all this stuff. But it gives you a quick summary of what the different markets are doing, what the different sectors are doing, what the big stocks in each sector are doing. It even will filter out some of the stocks for stocks that were the top gainers, had unusual volume, top losers. It has some current events, some major news that just has dropped for different stocks. See, like these are the major news stocks. So Myrna was down 10% yesterday. Even shows you some insider trading. So if there's any CEOs that are either buying or selling a lot of shares, it lets you know that. It has just a very good summary of what this market is doing. And I would highly recommend you watch their little tutorial video here just to give you a lay of the land. But I mean, even it has Forex. I don't trade Forex, but if you're into that kind of stuff, even has stats and data on that. But you could even search stocks based on their pattern if you like technical analysis. So for example, if you want to look at stocks that have a wedge up pattern, well, right now it's identified these four tickers. So it's just a very good overall website. But the reason I'm making this video is because in my last video, somebody requested a watch list video. So I could obviously just show you what my watch list is, and I will share at the end of the video. But I figured it would be better if I teach you how to make your own watch list. And this is what I did. So if you go to this website, Finviz.com, and what you can do is you can click on Screener up here in the top left, and that'll take you to this page. And it seems very complicated, but it's not really, because we're going to simplify this a lot. So what this is doing is this has listed pretty much every single stock in the market in alphabetical order. But what we want to do is we want to find stocks that are good to trade options on, to sell options like we're doing. So the first thing we need to do to kind of filter this data out is on the right side here, which is option short, we want to click optionable. So right now it's just searching every stock because this is any, but we want to hit optionable. And this means that we only want to look at stocks that we can trade options on. Not every stock in the market has options available. So just to give you an idea, if I go back to any, there were 382 pages of stocks currently trading in the market. When I hit only the optionable stocks, now it's only 208 pages. So it really knocked off almost 200 pages of stocks. So that's a necessary filter that you have to do right now. The other thing you want to do is you can go to the fund. So there's different tabs here. You have descriptive options. You can have fundamental options, which gives you even more kind of fine tuning. You can search stocks based on their technicals, such as their moving averages, their volatility, their RSI and such. So this is a very powerful website and it's all free, which I love. So let's go to the fundamental tab. And just to give you an idea, you can search by PE ratios. You can search by debt to equity ratio. And we'll come back on this and look at this in a second. But let's just stay on the descriptive tab for now. And if you've started watching my videos from the beginning, you know one of the things I always recommend is that when you're trading options on stocks, you need to make sure that the stock is very liquid. And by liquid, I mean that it has a lot of volume. So the way I like to think about it is, let's say you own a very rare baseball card. You know, there's only 10 of this baseball card in the world. And let's say you want to sell it because you own one of the 10 and you want to sell it. Well, the first thing you do is you look to see what the other 9 baseball cards are selling for, right? So let's say the other 9 cards are not on the market. They're not on sale. So you have the only one that's for sale. Well, that basically means that you can set any price you want. If you think that card is worth $100, you can ask for $100. If you think it's worth $1,000, you can ask for $1,000. Now let's say somebody comes along and they want to buy that baseball card from you, and yours is the only one for sale. They may think that card is only worth $50, but you think it's worth $100. So you have it for sale for $100, and the other person, the buyer, says, hey, I'll give you $50 for it. Well, that's the equivalent of the bid-ask spread when you look at stocks. That means that someone is willing to buy it for $50 and someone is willing to sell it for $100. So you can see there's a very big discrepancy, right, between $50 and $100. So both parties, they could say, well, you know what, I'll meet you in the middle. I'll sell it to you for $75 and you buy it from me for $75. And that might be okay. But maybe the seller says, you know what, no, I'm not willing to sell this for less than $100. So take it or leave it. If you don't want to buy it, that's fine with me. So that's what happens in the stock market every day. So when you're looking at options, you always see that bid-ask spread. And on Robinhood, just to give you a quick aside, let's say we go to AMD again. When you click on the option and you go to trade, Robinhood doesn't show you the bid-ask spread on the main screen. It only shows you one price, let's say $1.37. But if you open this up, now you'll see the bid and the ask. So see, there's a discrepancy between $1.33 and $1.41. So this option, people are asking $1.41 to buy it from them. Let me rephrase that. So people are willing to buy it for $1.31 and people are willing to sell it for $1.41. So there's an almost 10-cent discrepancy there. So what Robinhood does, this mark price is usually the middle price between these two. It's kind of a happy medium, right? Meet halfway. So if you don't like that, you can actually, let's say you wanted to buy this option, you can usually, I mean, the market's closed right now, so it won't let me do it, but you can actually set your own price. Like you can say, I want $1.39, and you can type that into the buy menu. So that's what the bid-ask spread means. Now, why this is important is because if a stock is very liquid, meaning there's a lot of volume, what that means is that the bid-ask spread is going to be very tight. So this range may only be a couple cents, right? If the stock is not very liquid, like in the case of my baseball card, the spread could be very wide, like on the orders of $1 or $2. And you don't want that because you don't want a lot of discrepancy. Because think about it this way. Let's say, going back to my baseball card analogy, let's say, you know what, I said I am not selling my baseball card for less than $100. And you said, you know what, that's fine. I'll buy for $100. Well, that means, let's just say there was another buyer on the market that was also only willing to pay $50. If you bought my baseball card for $100, you're automatically in the hole $50 because you bought it at a higher price than other people are willing to buy it for. So if the bid-ask spread is very tight, that means you're not losing a lot of money automatically off the purchase. So think about it another way. If you go to the car dealership and you buy a brand new car, you know there's that saying that the moment you drive off the lot, your car loses value? Well, same thing. Would you want to buy a car that, let's say, costs $25,000 brand new, but then if you drove it off the lot and tried to sell it used, all of a sudden it's worth $20,000. So you automatically just lost $5,000 right off the bat. Or what if you bought a car that was for $25,000, you drove it off the lot, and used it's worth $24,000, right? Would you rather lose $5,000 just driving it off the lot, or would you rather just lose $1,000? So same idea with stocks. You want to keep a tight bid-ask spread, and that spread is a factor or is a product of the volume of the stock. And so volume just means the number of shares of stock or the number of options of that specific option that were traded in that day. So I'm telling you all this because in the screener, I only want to trade liquid or very popular stocks. That's another way to put it. So one thing you can do, and this is what I did, so you can go to this current volume tab and just go to the highest number, so over 20 million. If you click this, now you can see there's only 5 pages of stocks. And what that means is that I'm only looking at stocks right now that I can trade options on and that have over 20 million essentially trades per day. So what I would recommend you do is start with the highest number, which is 20 million. and there's only 5 pages of stocks. There's only 20 stocks on a page. So go through this list just visually and see if there's any stocks you like or that catch your eye, and just jot them down. So personally, I don't like investing in stocks that I don't know what the company is, or I don't know what they do, or how they make their money. Like if I don't understand what that company is, and or if I don't like that company, then don't invest in it. Why do you want to invest in something that you don't even like or you don't even use? So that's just my criteria, and this is just my opinion. You can choose your own stocks. And obviously we all have different preferences, right? For example, someone might hate fast food. So then don't invest in Wendy's and don't invest in Chipotle or McDonald's. But maybe somebody else loves McDonald's. They eat McDonald's 3 times a week. Then go ahead and invest in McDonald's. You're giving them business. Why don't profit off of it? So the other thing you can do on this same page is you can sort these stocks by sector as well. For example, if you want to invest in the healthcare sector or the financial sector, or maybe you want to avoid the real estate sector because you just don't like real estate, or you don't want to deal with the stocks, or you think real estate is going to tank in the coming months or years. So you can sort these out how you like, but just doing optionable and sorting by volume will give you a very broad or a wide list to sort through. So just look at this first page, for example. If this was me, American Airlines, I'm sure we all know what American Airlines is, but I'm sure we also all know that the airlines aren't doing so well right now. So personally, I would avoid that stock. But let's look at Apple. I mean, we all know Apple is absolutely crushing it, right? So Apple is on my watch list because, first of all, Apple is not going to go bankrupt anytime soon. I know they make a ton of money, right? So I also know that, look at their volume, it's 25 million. So I know it's going to be easy to sell options with Apple. The only downside with Apple is that it's rather expensive. It's right now trading at $313. So I keep it on my watch list though. I mean, there's another stock, Ambev. I have no idea what Ambev is. It says it's in the consumer defense sector, and it's in beverages and brewers. So it's some sort of, alcohol company from Brazil. So again, maybe you don't drink alcohol, then don't invest in this stock. And like I said, I don't even know what Ambev is. So here's AMD. This is my favorite stock as of late, right? I'm actually crushing it with AMD. So that's definitely on my watch list. Here's Boeing, right? We all know what Boeing is. Alibaba. Alibaba is like Amazon in China. I mean, you can use it in the United States as well, but it's the equivalent of Amazon essentially. Bank of America, I know what that is. I don't know what Banco Bradesco is. It's apparently a bank in Brazil again. So again, I wouldn't put this on my watch list. I wouldn't invest in the stock. Nothing against the stock. I just don't know what it is. Citigroup, right? Carnival, right? Cruise lines, again, not looking so great right now. Comcast, we all know what Comcast is. Delta Airlines, Walt Disney, right? We all know Disney's on my watch list because, again, Disney has Disney Plus right now. They have theme parks. They make movies. They're in the entertainment industry, right? They're not going anywhere. They're not going to go bankrupt. Even if things are not looking good for them right now, they're not going to go bankrupt, right? What's Dynavax Technologies? It's some sort of biotech company. I don't know what that is, but they have a lot of volume, so they're popular. But again, I don't know what it is, so I don't want to invest in it. So what I would say is just go through these lists, go through these 5 pages and do what I just did. Here's Facebook, right? That's on my watch list because I know what Facebook is. They make tons of money and I know they're going to do well. Here's IWM, right? I've been doing well with IWM lately as well. Here's JCPenney. Now, you may be asking yourself, well, wait a minute. Didn't JCPenney just go bankrupt? Why are they in the 20 plus million volume list? So you have to be careful with this because the reason this is accurate, I mean, they traded, 170 million shares. So they're popular right now. So this just means right now, right? Current volume. It doesn't mean average volume. So if for whatever reason some stock just absolutely pops in the short term, it's going to be on this list. So just be wary of that. I mean, you can do average volume as well. So you can do any here, and to avoid stocks like JCPenney, you can do average volume. But again, the limit is a little bit less. 500,000 to 10 million is the biggest. And now you also have 117 pages to go through. So what I would recommend is doing is start with 20 million on the current volume. Just go through all 5 pages and make a list of stocks you like, okay? Then what you can do is, let's say you didn't get that many stocks. You only have like 5 that you picked out. Then drop down to 10 million and do the same thing. Now there's 9 pages, right? Just see what other stocks you like. Then drop down to 5 million, see what stocks you like. But don't drop down too low, right? And like I said, you don't need 100 stocks on your watch list because that's just more stocks to sift through. Just pick good companies. And then the other thing is, you don't want to pick stocks that are all like $300 a share, right? Because most people can't afford that. So make sure you pick a good variety of stocks. Some that are like $50, some that are 100, some that are 150, some that are 200, some that are 300. And that's what I have in my watch list. So I will show you what I have in my watch list, and then you can see if you agree with some of my stocks. So here's my watch list. It's mostly in alphabetical order. I just put SPY on the top just because it's a good, it's a S&P 500 ETF, so it's just a good overview of what the market is doing. I just want to, if I want to have a quick glance at what the market is doing, I keep it at the top of my watch list for that reason. So I have SPY, I have Apple, right? We mentioned Apple. I have AMD, and I have Amazon. I mean, I haven't traded options on Amazon because it's just crazy expensive, but maybe one day I'll have enough capital to trade options on Amazon. I have Disney, like we talked about. I have Facebook, Google. Again, Google is also pretty expensive. But again, it's a good company, so maybe one day I'll have enough capital to invest in Google. IBM. I know IBM is not my favorite stock on my watch list right now. I haven't traded it as of yet, but I know IBM is a good company, and I know they're not going to go bankrupt anytime soon, and the value is not that high. It's $121, so I just kept it on there just to keep an eye on it. I have Intel. Between Intel and AMD, personally, I think AMD is actually just crushing the market right now. So that's why I'm more into AMD than Intel, even though they're roughly the same price. But again, Intel is not going to go anywhere anytime soon. IWM, if you've watched my previous videos, I have Coca-Cola. Again, Coca-Cola, maybe you're not a Coca-Cola person, maybe you like Pepsi. I chose Coca-Cola because Coca-Cola had higher volume than Pepsi did. So it was a more liquid stock to trade options on. Microsoft, again, not going anywhere. MU is Micron. They make computer processing chips similar to Intel and AMD. I haven't traded it yet, but Micron, MU, is a very popular option stock, so I keep it on my watch list in case I do want to trade it. Netflix, we should all probably know what Netflix is. QQQ is similar to IWM, except it tracks the NASDAQ 100. I haven't traded it yet because it's almost double the price of IWM, and I just don't have the capital for it. Space, right? This is more of a speculative stock. I would say of all the stocks on my list, Space is probably the most risky, but I keep it on my list because it's also the cheapest stock, and it has really high volume. So if I ever want to make some kind of low value trades with still getting a good return on my risk, I trade Space because it's only $15 a share. Tesla, I keep it on my list. I'm a little bit scared. I would say Tesla is probably the scariest stock on my watch list to trade because it's so darn volatile. I mean, Elon can literally send one tweet out, and in 140 characters or less, he can crush the value of Tesla by 100 points or more. I mean, it's crazy. So I just like to keep an eye on it, but I'm a little bit scared to trade Tesla. Visa, again, Visa is not going to go anywhere anytime soon. The other corollary to Visa will be MasterCard. The reason I don't have MasterCard on there is, one, because I think Visa is more popular in general, and two, MasterCard was also much more expensive than Visa. So Visa was much more palatable for me to trade options on. And Walmart. Again, Walmart is not going anywhere anytime soon, and especially in times like these, if we go into a recession, or I think we're already in a recession, but Walmart stock is going to go up, right? Because people are going to look for cheaper options in terms of their groceries or in terms of their household items. So this is my watch list. So I have, as you can see, I don't have a million stocks, and I only trade maybe 2, maybe 3 stocks at most at any given week. So I don't need 500 options to sift through. I just need to look through maybe 10 or 15, maybe 20 stocks. So that's why I would say pick the stocks that you like and make sure you pick a good range, and then just look through those stocks to see what trades you want to make every week. Let me know in the comments below what your watch list is. What stocks do you like? What are some of your favorite stocks that you've been wheeling or selling options on? And have they been good to you? Have they not been good to you? If you have any questions, please let me know. I really appreciate it when people give me suggestions for videos, because I don't want to keep making the same boring videos every day, and I want to be helpful to you guys, and I want to answer your questions as best as I can. Just remember, none of this is financial advice. This is all just my opinion. I'm just sharing with you my strategy for trading stocks, and so far so good. Knock on wood, it's been going well for me so far. So if you have another strategy, let me know. But I just want to say thank you guys for tuning in. And, go to this website, Finvizcom. I'm not affiliated with this website whatsoever. They're not paying me. I don't own this website. And just play around with it. There's a lot of, tinkering you can do with this website. And there is a paid option for this website, but you don't need it. There's so much free information here that you could spend days on just analyzing stocks. And the one last thing I wanted to mention is that when you make your list of stocks that you like based on this search that I mentioned, what I would then do is go through every stock and then open up the chart. And Finviz will basically do a 1-year chart, and if you want to do it for a longer duration, it won't let you because it's going to make you pay for their upgraded version. So just go to another website like this. This is TradingView.com. So trading, TradingView.com. And this is 100% free. And this, you can set anything you want, as much time frame as you want. You can have indicators on. So I have the RSI curve, I have volume, I have Bollinger Bands on, I have the Fibonacci sequence or Fibonacci levels on, the Fibonacci retracements. So the next step I do is, after I made my list of stocks that I want to put on my watch list, is I only pick stocks that I think are shooting up. Meaning, I don't want to pick stocks that are up and down and up and down or trading sideways for years on end. I want to pick stocks that are, have a positive movement towards the top right. So here's an example of what I look for when I look at the stocks that I have now created on my watch list. So you want to pick stocks that look like this. This is the 5-year chart on Apple, and you can see it's a slow and steady, just increase over time, right? So here's the stock. If we go back to our screener, DNR. So this stock is a liquid stock. There's over 20 million in volume. It's optionable, but this is the reason why I don't want to pick DNR. This stock is up and down and up and down and down. Don't pick a stock like this, because if you get assigned shares of stock and you end up holding it long term, you don't know what this stock is going to do. You may, end up holding a lot of money in the stock just while it travels sideways or it goes down. So that's what I would look for when you open up your stock charts. And then definitely don't pick a stock like this. This is ACB. I know this is a very popular stock that people trade options on, but look at it. It's a downhill curve from the beginning of time. Why would you pick a stock like this? You're just pretty much guaranteed to lose money, in my opinion, if you get assigned shares. So that's what I do. I would say go through this list, pick out, write down 20, 25 stocks that you like, then go and open up their 5-year charts, and then delete or erase all the stocks that look like this or that just go up and down and up and down. You want stocks that look like this. They're just going up, because if you get assigned shares, give it enough time, that stock will go back up in value. So that's what I look for in terms of forming my watch list. Let me know if you have any other questions. I can certainly make more videos in more detail describing this process. One of the things I'm thinking about doing is putting together some kind of high yield, almost like a masterclass type video where it's educational and not, as off the cuff. But obviously those are going to take me a lot more time. And I was going to think about starting from like the very beginning, like what are stocks, and then just leading you all the way through how I trade options and, what my strategy is. But that's going to take me a lot of time to put together. So just, keep with it. Bear it with me, and keep tuning in. And as always, happy trading.